I would officially be starting the session. So once again, welcome to this. I won't call it Twitter Spaces again because we are not using Twitter Spaces. So welcome to this side chat organized by House of Tech. House of Tech is one of the biggest tech platform. Let me say WhatsApp tech platform. It's a community that has been existing since 2017, and currently we have over 1,000 active member in the community. Okay. So very quickly, we'll be talking about beyond salary, building wealth as a techie, right? So this conversation um, talks about tech professionals, how they can, you know, build their wealth beyond what they earn as salary. And we have very interesting lineup of guest speakers. I have Godwin, I have Joe, and I have Oluya Folabi. These are professionals who they have wealth of experience across investment, across finance. They are also tech professionals. So for everyone who have joined, thank you so much for joining, and I hope you have a very enlightening and educating section. Okay, so as we all know, let me say for the past 5 years now, Nigeria has been dabbling with series of inflation here and there. Um, some years back, if you were earning, let's say 500,000, what you could afford with 500,000 is the same thing if you are earning 1 million naira now, same thing you'll be able to afford. So what that simply means is what you were earning 5 years ago, which tallies around 500,000, is sort of equivalent to what the worth of that amount is in 1 million naira. I'm not sure if I explained that very well. I'm not a finance person. So the bottom line is beyond you just earning salary as a tech professional, there is need for you to expand your sort of income, right? So I mean, I will leave that conversation to those who have better knowledge than I am. And for this session, I would want Afolabi Abiodun, the founder of Essential Group, to kickstart that conversation. So, Afo, if you are here with us, kindly please unmute your mic and you can kickstart the conversation. So, you have about 12 minutes to educate us across the key points that has been shared with you previously. Thank you.
Hi, good evening, everyone. Am I audible enough, please?
Yes, you're audible. Thank you.
Thank you very much. So, yeah, good evening, everyone. My name is Biodun Afolabi. I'm the CEO of Excelsior Global Deals in. We have an academic writing agency, and we have a cargo and logistics uh, company too. So both services are rolled into one at Excelsior. That's what we basically do. Now, as a CEO, before I became a CEO myself, I worked in the financial technology space for well 5 years, and I was directly responsible for surface level stocks analysis at my last place of work. So I basically dealt in uh, business writing, stocks analysis, and everything that has to do with finance. So my job was to gather information about different financial moves and initiatives and distill those complex information into bits that is understandable by everyone that comes across such pieces. So it is on the basis of that that I would be headlining this conversation tonight about uh, finance, investment, and the need to grow your wealth beyond your salary. So yeah, the first thing I'll be talking about is the need for everybody to be financially literate. I know many of us, um, the way we were raised and all that. Some of us had the ample opportunity to have parents who, in a way, we got to learn basic things about how finance works and all of that. At least some of us had parents who did a job. That's thrift, right? Some of us had parents who were into different cooperative here and there. Now, these are some of the ways people exhibit their financial literacy. And it just simply means that if you have a job or you have a business and you make money, it's not enough for you to just make money. It's also very important that you understand how the money you make works. It's important that you understand how to increase what you make, through which you can increase your earnings. I'm going to be talking about the different ways you can increase your earnings. Considering the fact that in the last couple of years, Nigeria has been hit with high level of inflation. So it means that the purchasing power has reduced. The worth of 500,000 naira in 2026 is not the same value of 500,000 naira in 2015. So it means that what 500,000 naira could do in 2015 is what something like maybe 3 million or 4 million will do in 2026. So it means that whatever it is you do, you just have to find ways around growing your wealth, because you cannot afford to just be working and receiving salaries without having proper structures around money moves. So the first way to build wealth that goes beyond your salary is to look at other things you can do outside of your 9 to 5 job that can boost your earning capability. Let me give you an instance. Let's say you are working in a 9 to 5, you are working in 9 to 5 space, right? Let's say salary is 300,000 or 400,000 naira. Now your rent is the way rent is in Nigeria today. In Lagos, if you are looking for any decent accommodation in Lagos, right, should budgeting between 1.5 million naira and 2.5 million. Now, for someone who earns 400,000 naira monthly, it means your annual income is 4.8 million, right? Now, if your rent is around 2 million naira, it means out of your annual income, you are spending 2 million naira on rent alone, and that will be leaving you with the remaining 2.8 million. Now, if you divide 2.8 million by 12 months, what will be left for you will be something, let's say something around 235,000 naira per month. Now, is 235,000 naira per month something easy for you to live the kind of lifestyle you would have loved to live? So that now means that you just have to find ways around what you earn for things to be very easy for you. Now, one of the ways to increase your wealth is beyond your salary. You can look for side jobs or side gigs. In the world today, we have what we call the digital economy. So regardless of what you do, you can actually leverage the skill set you have to earn more. Let's say you are working in a bank, you are a teller, right? But some of the skills you use as a teller, you know how to do PowerPoint presentation, you know how to use Microsoft Excel, you know how to use maybe SQL and Tableau and all of that. Now, despite the fact that you are using all these skills at work, there is nothing stopping you from leveraging all these skills to earn more money outside of your workspace. It means that, let's say after your work on a daily basis, when you get to the house, if you decide to, you may open a freelance account, maybe with Fiverr.com or Upwork. We have multifarious freelance platforms across the world. You can decide to register on any of those things and position yourself as an expert in the skill set you possess. And before long, once you have positioned yourself very well and you have optimized your page, you start getting people that will give you jobs. And once you get the first job and you are able to deliver excellently, you'll be getting referrals. So let's say from your freelance from freelancing. Let's say you are making nothing short of like maybe another 400,000 naira in a month. Added to the 400k you earn at your workplace, you already have 800k, right? So it means that how you live your life will be easier because now you have more cash flow. Money gives people options because you now earn higher. You are able to do quite a number of things without actually breaking the bank or thinking too hard to actually afford certain basic things. Do you understand? Now, beyond now earning, it is the other part of it which is very important, that you must learn how to make your money work for you. Now, many people always say that the reason why they are not they don't the reason why they are not investing is because they are earning so little, and they always think that people who are able to invest are people who have money. Now, it is not always the case. I think the most important trait for anybody that is going to venture into investments, I think the first trait is discipline. And discipline is not something that is easy to come by. You must take pains to instill discipline in yourself. Now, if you earn 400k monthly, we have what we call the 50/30/20 rule. For so 50% of whatever it is you earn should go into your essentials, maybe your food, your accommodation, your clothing, and those are essentials, right? 50% of your earnings should go into that. 30% of earnings should go into your um investment and savings. So let's break down 400,000 naira. You earn 400,000 naira, 200,000 naira goes into your essentials, right? Now you are left with 200,000 naira, and you are breaking that into 30/20% too. So that means 125,000 naira should go into your savings and investments, and the remaining 20% should go into your emergency savings, right? And now the reason why you should have an emergency fund is because anything can happen in life. Life is full of risk, right? So, an unplanned hospital visitation could require you to spend money. You are going to dip your hands into where you have your emergency funds, and you are able to take care of that. You could have something that is happening around you. It could be black taxes and all of that, because most times for people who are working, you always have family members who are always needing their help for one thing or the other. So that's what emergency funds are, and all of that are for. But for the 30%, which is meant for investment and savings, you can divide that money into 10/10/10. Now, there are different kinds of investments, but the first thing is you must research the kind of investment that aligns with your own risk appetite. Because everybody is doing cryptocurrency does not mean you should also do it. First thing is, most people, because something FOMO, fear of missing out. Many people have rushed into investment they know nothing about because every other person is doing it, and they are not actually considering their own position when it comes to all these things. So you know that you are saving money from your hard work. You are not meant to just gullibly go into an investment you know nothing about, right? So you can decide to buy. So we have different kind of investments, but for the sake of this online session tonight, I'm going to be talking about equity investment, which involves stocks, bonds, ETFs, and money market funds. Now, what are stocks? Stocks are stocks are also interchangeably used as shares, right? It means you are buying a particular stake in companies who have listed on the stock exchange. Now, all these companies, we have foreign companies, we have Nigerian companies too. When they have gone IPO, that is initial public offering, it means there is a particular amount that is tied to a unit of their shares. So let's say you are buying shares of First Bank now. A unit of share of First Bank could be around 5 naira per unit, right? You could decide to say, okay, and I'm now talking about everybody now, not that some people are the ones that can invest. I am earning little with as low as 5,000 naira. Yeah, you can decide that every month you want to invest 5,000 naira into buying stocks. So let's say First Bank Nigeria sells their unit of shares for 5 naira. It means with 5,000 naira, you can afford 100 units every month. It means that if you are consistently buying First Bank of Nigerian shares with 5k every month, by the end of the year, you would have bought 1,200 units of shares at 5 naira each. Now, the funny thing about stocks is that, of course, it is a high risk investment because anything can happen to First Bank now and their shares will plummet. But something positive can also happen to them and their share price will rise from 5 naira 25 naira in a single day, right? Now, what makes it easy for you is that because the major way to make money from stock investment is through compounding. So, if you have 1,200 unit of shares, which is your capital base, right? That means it costs you 60,000 naira in a year to buy 1,200 unit of shares, right? Now, some companies, because they are profitable, they pay what we call dividend on their shares. So let's say a company like First Bank decides to pay uh at the end of the year, they decide to pay maybe 50 kobo dividend per unit of share that you bought. It means that on your 1,200 unit of shares, if they are paying you 50 kobo dividend, right, on it, by the end of the year, that is 600 naira. Now you may be looking at it like, what do I want to do with 600 naira? But do not forget that that 600 naira can also go back into buying more unit of shares that you will add to the existing shares that you already have with First Bank, right? Now, when we are talking about investment, do not also forget that we are talking about the long-term effect of investment. It's because you don't want to just work and not have anything to fall back on, right? So every year you are always buying shares of First Bank or maybe other banks too. It means that by the fifth year, you can imagine the number of unit of shares of First Bank that you would have had. Now you can also imagine the compound effect of the dividend they are paying on each unit of shares to you that you are also reinvesting. It also means that your capital base has increased, right? So instead of you just saving money in a bank without doing anything, you have bought shares and you are seeing dividends. The gains on it may be little, but it is still better than your money not doing anything or your money being spent because if you don't have plans for money, you can spend it on anything, right? So that is how stocks work. Now, these are just basic information about how stocks work. Each person can also decide to do their extensive research on how all these things work. And if any other person needs to know, if you have a need to know more about all these things, you can also reach out to us for piece of advice for free on how to be about most of these things, right? Now, that is as far as stocks is concerned. Now, we also have what we call bonds. Now, bond is different from stocks, but they all work almost in the same space because they are all equity related. Bonds is just simply you lending money to entities of fixed for fixed returns. But most times, the people that are always selling bonds are, I think, government and other institutions are the people who are always responsible for bonds. So let's say the federal government of Nigeria now is selling treasury bills because most bonds are treasury bills. So they are always classified into tenors. We have the 90-day tenor, we have the 180-day tenor, we have the 270-day tenor, and the 360-day tenor. So let's say you are buying a bond of 100,000 naira, and the government is promising you that at the end of 270 days, they are going to pay you 22% interest on it. It means that the first thing is if you have 100k and you have it in your bank account without any purpose, there's a likelihood that at the end of 270 days, you would have spent the money. But if you buy government bonds with it, the first thing is you don't have access to that money anymore until the 270-day tenure is over. And at the end of that 270 day, they are paying you, let's say they are paying you 22%. 22% of 100,000 naira is should be 22,000 naira, if I'm not mistaken. So it means that by the end of 270 days, you have gained 22,000 naira on it. You may also look at this as small money, but do not also forget that the higher money you have to invest, the higher your returns too. And if you are also someone who is willing to play the long game, yeah, over time you realize that you have built a system of wealth that works and makes your life easy. Now we also have what we call money market instruments, yeah, or money market funds. Those ones, they are short term and low risk investments, right? They also work like bonds too. You have different tenors for things, and you can always buy, you can always invest your money in them for a period of time. And anytime you are no longer interested and you want to liquidate your investments, you can get your money instantly too, right? Then we have mutual funds. Mutual funds are put funds in different assets. So it can be in form of real estate. For instance, we call something rights. That's real estate. I've forgotten what the IT means, but it's mostly real estate investment. So it could be companies dealing in real estate investment. Maybe they are building houses. They can say 10 people should come together and raise maybe 60 million to build a house, right? And it's something that is somewhat related to land banking and all of this, but right is quite different because it operates in the equity space. Yeah, so people could come together to raise 60 million to build a particular. Let me use Lekki as an example. Most of these real estate companies are building houses and all of that. They are doing joint ventures and all of that. They can say 10 people should come together to raise 60 million, and they want to build one particular structure somewhere. And after they have built it, right, once it is built to taste, they can decide that they want to sell it off. They can decide to sell it for 100 million. They can decide to sell it for 120 million. So let's say they are selling it for 120 million. It means that over maybe in the space of 1 year, they have gained 60 million back, right? So everybody's capital is returned to them, and they are also getting a particular percentage as interest on what each of them has invested to. So these are some of the ways you can dabble into equity investment. But the major thing I want to let you know about it is that you should not think about whether you earn so little or you earn so much. I think the most important thing is making the decision to invest, changing your narrative, changing your mindset about earnings. You may be earning 5 million and you don't have any savings too, because you always be like, okay, because you are earning so well, you don't think anything can happen to you. But life happens to everybody too, and most times when it happens to people, they are always caught unawares. So it's always very important that before life happens to you, you start thinking about ways around building wealth and stabilizing your finances beyond your salaries, so you don't get to be living from paycheck to paycheck. So if you have a particular percentage of whatever you earn that you want to start investing, look at different ways through which you can invest your money. But first thing is, ensure you understand your risk appetite. So are you a low risk person? Are you a mid risk person? Are you a high risk person? So risk, whatever your risk threshold is what will determine the kind of investment you can go into it. But you also need to do extensive research on whatever it is you want to put your money into, so that by the time you start making your decisions, it won't be that you are pressured into doing all of those things and all of that. So yeah, thank you very much for having me tonight.
Thank you so much, Afolabi Abiodun. Every insight you've shared with us, we appreciate them. So if you have any question for Afolabi Abiodun particularly, please just compile your questions during the Q&A session. You have the chance to unmute your mic and ask a question. So I'll be calling on Godwin, the research lead for Leaf Africa, to share his word of experience on investments with us. So Godwin, please. You can unmute your mic and educate us. Thank you.
Yeah, good evening, everyone. Kindly confirm if you can hear me. Um, okay. So I'm guessing the thumbs up is that you can hear me, right?
Yes, we can hear you.
All right, good. Just for a start, I would encourage and admonish everyone, please, very close attention. because I would be giving practical steps and building on what the previous speaker has already spoken on, right? So he spoke extensively about a lot of things, but I'll try to be more specific, right? So I'll be starting with, first of all, before you can think of investing, saving, or whatever, you need to have a job, right? You need to have something that is giving you money, right? You need to have something that is sustaining you, right? So for those that don't have a job, forget about everything we are saying, right? You shouldn't even be on this call because you need cash flow, right? You need money. So first of all, you get a job. Now, for those that have a job, right, you don't have to be earning so much to save or invest, right? So that's one. And two, whatever money you earn, you can save a bit of it, a fraction of it. Now, let me give you an instance. In economics, there's what we call identity. Identity simply means economics, finance, engineering, or they know what identity means. So in economics, savings equal investments. What that means is that whatever you invest is what you've saved, right? You can't invest what you don't save. So savings equal investment in such a way that you earn interest because you've saved. That means you've deferred your consumption to later future. So that is saving. Saving is just future consumption. Meaning that instead of eating your money, everything today, you say, okay, let me save some so that I can eat tomorrow. So see savings as future consumption. What that means is that your savings can save you in the future, right? Because if you eat everything today and you don't have savings, and God forbid you don't have job, what then happens to your future consumption? It means you borrow, right? So savings equal investment, and people typically get money from investment because they are borrowing from people that have saved. So people that have saved needs to be compensated for saving, right? For example, if I need money to maybe build a plant, what do? I go to somebody that have the money, right? Someone that have saved the money. I say, please give me 100,000. I want you to build, I want to start a business and all of that. So the person is going to give me the money on the condition I'm going to give him back maybe in the next month with an interest, say 10%, right? So the person has earned money from saving, right? Me, I'm going to collect money for you. Me, I've eaten everything. So I don't have money to expand my business. So because I'm coming to come and meet you, I have to compensate you for giving me your money. So that's where the whole savings, investment, interest rate, and financial markets came about. Right. So financial markets basically reward savers. The reward saver simply means that those that have saved, that have deferred current consumption to gather their money, they need to be compensated. Right? Now, since they need to be compensated, what interest, right? What excess can we compensate them for? So that's just basically essence of the financial market and the financial system. Carrying money from savers to those that need it, right? Because we believe that people that are saving, they don't need the money now, right? So those that are investing need the money now. So those that are saving don't need the money now. They give it to those that need the money now with what expectation of what interest. And another foundation I want to lay is that the money, if you earn 500,000, right, and you don't save anything, that 500,000 is not your own. You're just working for the company you're working for, or you're working for the family. Out of that money, you give friends, you're working for everybody except yourself. It is the money you save that is your own. Please pay attention to that. It is the money you save that is your own. If you don't save any money, it is not your own. So let's assume you earn 500,000 now. Maybe 100,000 goes to landlord as rent, 50,000 goes to food, and 20,000 goes to transport. Maybe some money goes to your girlfriend or your boyfriend. Some goes to your parents. It means that you are financing the lifestyle of your landlord through rent. You're financing the lifestyle of your parents, your girlfriend, your friend, but none of it is going to you, right? So it is what you saved that is your money. So after laying that foundation, I'll now go straight into the actual topic of interest, which is the Nigerian stock market. So understanding the Nigerian stock market. Now, the first question people typically ask in understanding the Nigerian stock market is, what is the stock market? I'm sure you've heard about stock market, you've heard about shares, you've heard about whatever. So the stock market is just a market where people sell stocks. See it as a dumota. When in dumota we sell clothes, we sell commodities, right? We sell actual stuffs. some places they sell clothes, some places they sell shoes, some places they sell football, bed, and all of that. So the stock market operates the same way. However, instead of selling shoes, bags, and the rest of it, you are selling stocks, right? Now, what is stocks? Stocks is a company's share. What that means is that look at, say, a company, say Dangote, for example, Dangote Cement. So Dangote Cement is a company, right? And that company is a whole, say 100% is whole, that's 100. Now, they now come to say, okay, oh, although we are a private company as Dangote, we are coming to the public. We want to become a public company, that's PLC, right? If you're coming to the public, we need to what? Have certain amount of shares, right? Now, certain amount of shares or stocks can now be what? Traded in the open market. This might look confusing, but I'll break it down. What I mean is that Dangote as a whole is now a public company. So for you to now be able to own Dangote, you can, go to the market, buy some shares of Dangote. Some shares simply means say you bought 10 stock of Dangote now. It means you own 10 shares of Dangote. It means you are part shareholder of Dangote, or share stocks, they are intertwined. Stock is the unit that you buy and sell, right? So let's say you buy 10 stock. It means you own 10 stock, right? That implies that you own 10 shares, meaning that you are part shareholder of Dangote. So if in this call now there are 25, so if 25 people buy say they buy for 4 units of Dangote, it means that the 25 people own all the shares of Dangote. However, each person owns 4 shares, right? Or 4 stock, right? Or 4% of the share of Dangote stocks, right? So that's the difference between shares and stocks. And shares or stocks is just a unit of a company, right? So it's just a contract. In law, contract is just an agreement between two persons and all of that. So in stock just simply means there is a contract that shows that Dangote value on paper is 100. Now, if you're coming to come and buy it, you're going to buy maybe 10% of Dangote value. Someone is coming to buy 10 and 15%. Someone is going to come and buy 30%. So whoever is buying all of those simple units are buying shares of Dangote, right? So that's what shares simply means. Now, if the analogy I gave is that we're 25 in a group and each of us bought 4 shares or 4 stocks of Dangote. Buying 4 stocks of Dangote simply means that each of us own 4 shares, right? Because we are shareholders. Now, if we now want to sell our shares, let's assume, okay, I bought Dangote shares today, I want to sell it tomorrow. Maybe I need the cash for something. What do? I go to the what? Stock market. That is where the stock market comes in, right? It's a market that exists for trading shares of a company, right? So just the way Facebook market is, where you can buy and sell online stuff. You can buy and sell your what they call your bags, your laptops and all of that. eBay, just the way eBay is now, right? So eBay can, eBay is the platform where you post your what you need to sell, and same thing with the stock market. Just the same way those online markets are, that's the way the stock market is. However, what we are selling there is shares. We are not selling bags, we are not selling books, we are not selling laptops or whatever. We are selling shares, right? That is just the idea of the stock market. Now, how do you invest or how do you benefit from the stock market? Same way you benefit from normal markets. Buy low, sell high. So let's assume you are selling bags. You go to, let's say, you go to China to buy the bags. The cost of the bag is say 100 naira, for example, just to simplify the analysis. 100 naira for the bag. You buy 100 naira, right? You sell it 150 naira. You bag your 50 naira profit, right? Same way with the stocks market or the exchange market, right? Same way with the stock market. Since we are trading shares in the stock market, we are trading stocks in the stock market. What that simply means is that I'm going to buy now in expectation that if I want to sell next year, the value of that stock would have grown. Now, when the first speaker was speaking, he gave an example of bank, say GT Bank now, right? You invested into, First Bank. Say you invested in First Bank because you believe First Bank is going to, their revenue is going to grow. Whatever belief you have about the bank, you shall bought the stock, right? With the expectation that the value is going to increase maybe in the next say the next year, right? Same way you buy land now and expect the value of land to increase maybe next year. Same way you've done your analysis, you say, okay, I see the value of this is going to increase next year. I buy it now, right? So you go, you buy the stocks, then in 1 year time, the stock appreciate by say 15, 20%. Then you sell it, then you bag your $20 gain, right? Or your 20 naira gain. That's the stock market works like a normal market. People just tend to overcomplicate things, making it seem as though it's one arbitrary or one crazy. It works like a normal market. However, what we sell there is stocks, not bags and shoes and all of that. Now, let me take us back a bit. The reason why many companies come, for example, now the Dangote refinery will be coming to the public, right? So Dangote refinery is already existing, right? So they have the refined crude oil to produce fuel, jet oil, and all of that. Now they are coming to the public. They are issuing 10% of their 10% of the company's worth to the public. So Dangote refinery is currently not in the public. However, Dangote cement, Dangote sugar is in the public. In the public simply means that you can trade their shares. However, Dangote refinery you can't trade their shares because it is not in the public yet. Let me take it down to, let me give you an example again. Let me bring it home a little bit more. Let's assume you're an entrepreneur, you sell perfumes, right? Now, these perfumes you sell, you own it, you are the CEO. Everybody knows you're a CEO. Let's not assume you don't want to just own your company again. You want to raise money from the public market. Then you go to what we call the public market or the stock market, right? You say, okay, I don't want to own 100% of my perfume business again. I want to sell some shares of my perfume business. You now share 50% of it, right? So people buy 50% from you in the expectation that in the next year, your business is going to grow, you make more money. When you make more money, you share it to all of us as dividends, like the first speaker has spoken, right? So different people enter the market for different reasons. So some people enter the market for dividends. So I'm entering the market so that I can get dividend from Dangote refinery. So if Dangote refinery comes and they start selling their shares, I'm going to buy the stock not because I expect the price of the stock to go up tomorrow, but because they're going to give me dividend. That's cash flow, right? Like I said, people go into the stock market for different things. One, I'm going for capital appreciation of my stock I've bought. Secondly, I'm going for what? Dividend. So as an investor that say have 200,000, right? What I'll do is by the end of the month, instead of saving say 30, 40,000 in a bank, I'm saving it in a money market mutual fund, or I'm buying some stocks or shares, right? So if I do that, it means that I'm deferring my current consumption for what? Future benefits. So that is just the foundation I wanted to lay. Now let's go into so I have some talking points here. How the Nigerian exchange market works. So I've already explained how the Nigerian exchange market works. It's just a marketplace like the normal Facebook market or eBay and everything. However, they provide a platform for people to trade shares, not to trade goods and services, not to trade books and barrels or bags and shares, bags and shirts or whatever you trade in the mortar market. But now we are trading shares or stocks of companies, right? Now the next is what exactly stock represents. I've already explained that. Stock represents basically you owning a particular share or a particular portion of a company, right? If the refinery comes public, if I buy, say, let's say I buy 100,000 units, that 100,000 units could be 10% of the share of Dangote. It means I own 10% of Dangote. So secondly is how investors make money from shares. How do investors make money from shares? I've already explained that. You make money from shares by collecting dividends. Some companies pay dividend, e.g. MTN. MTN is going to be paying, I think, 15 naira for every 15, is it 15 naira? Yeah, 15 naira for every 1 unit of share owned. And currently MTN share is trading around 700 naira. So if you own one share, you get dividend of 15 naira. If you own two, let's not assume you own 100, right? You own 100 shares. How much will you get? That's 15 times 100. That's 1.5. So if you own 100,000, you get, so it should now be 100,000. Let's say you own 100 million, right? Well, that's just arbitrary, but let's assume you are a big guy. You own 100 million shares of MTN. It means you'll be collecting 1.5 billion, right? So if you remove the zeros, you own 1.5 million. If you remove the zeros for that, you own 150,000 sorry, 15 million. If you remove zero further, you own 1.5. Remove. So it depends on the capital you are putting into the stock you are buying. However, dividend is just cash flow, free money. You are not you're not doing anything. Your money is just making money for you. So that is part of the reason why people buy shares. They buy shares first for dividend, second for capital appreciation. I've already explained what dividend simply means. MTN is giving out dividend, 15 naira dividend for every 1 unit of shares you own. Dangote also gives dividend for every unit of 1 shares you own. So if you own 10 shares, it means 10 times 15, right? They'll be giving you 150 naira every time they issue dividend payments. If you own, say, 100 shares, that's 100 times 15, which is 1.5. If you own 1,000, 15,000 naira as dividend. So you own 1,000 shares, right? That 1,000 shares, you still own it, but they are giving you 15,000 as extra, right? So that's part of how you make money from stocks. Now, I've already given examples of strong dividend paying companies. I've given MTN, I've given Dangote especially. Then we have Seplat, right? So we have some other companies like UAC. Yeah, so those are the Nestle, right? So those are dividend paying stocks that you can just buy for just dividend. However, capital appreciation is also still there. So IPOs and how retail investors can participate. So for IPOs, when MTN issued an IPO, I think in 2023, you could easily just buy from your Bamboo app, right? You can just, you subscribe for the IPO through a broker, and they give you amount of shares. So you can have your Bamboo app, you can have Carry Rise app and all of that. So use your app, and it's a very simple thing. You use your Bamboo app, tell them you want to participate in a particular IPO, and they allocate some shares to you. So you buy. IPO simply means initial public offering. Sorry, I didn't explain that. Although the first speaker spoke about it, but IPO is initial public offering. Initial public offering simply means the company is coming to public. So the initial stage in which the company is coming to public. For example, Dangote Oil or Dangote Refinery is currently a private company. So the moment they want to come public, they first of all issue an IPO. That's the first initial public offering. That means the first time I'm issuing my shares to the general public. So those that have bought it will easily buy it. Then they will not be trading it on what we call the secondary market, which is a little bit advanced, right? So that's what IPO simply means, initial public offering. And you can participate in initial public offering through your apps, your Bamboo apps, your Kairos apps, and all of those stockbrokers app. Stanbic IBTC Bank app. You can use all of that to, participate in initial public. Then how to evaluate stocks before buying. This is not something we can easily discuss in this call, right? Because it takes steps, step-by-step process. If you want to buy, for example, you want to buy bag. You don't just go to the market and buy the bag. Now you must have done your research. Google the bag, Google the price, Google the type of bag you want, the price so that they don't cheat you. So you do all those things before you buy your bag. Same thing with stocks. Before you buy your stocks, you have to understand the company. You have to do research on the company you're going to go and buy the stocks from. So you do your research, then say, okay, I want to buy it before you now, going to buy it. So it is more intricate and more nuanced. It's not something we can just discuss on a call on face value. Then long-term investment is a short-term investment speculation. So, like the first speaker spoke about, why are you investing? Right? Are you investing to build future wealth, or you're investing for sharp returns? If you're investing to build future wealth in the next 10 years, then fine, you can buy dividend-paying stocks and be getting dividends while your capital appreciates, because the stock market is always on the long-term growth. It's always going to grow. Even if during the short term you might lose you might lose money in the short term in terms of volatility in the market. However, over the long term, you always make money. So if your holding period, that means the years you want to hold your stock, you say 5-10 years, right? You're fine. So if you're building wealth for the long term, then fine, you can buy dividend-paying stocks. But however, if you're looking to benefit from the market in the short term, you want to just go in, come out, then you need more education about the stock market. You need to know timing. When do I enter the market so that I can buy low? Then when people come in, I sell to them and buy low, sell high. So it depends on how your risk appetite and your duration in the market. Are you investing long term? Are you investing short term? If you're investing long term, maybe next 10 years, then you can buy dividend paying stocks. However, if you're investing in short term, then you can buy stocks that, for example, I can buy, say, there's a strategy I use, because I know people always want to, New Year resolution, they want to buy stocks in the new year, they want to start investing, they want to improve their life, so they've written a New Year goals, New Year resolution. So I buy around like November, because I know that by January, February, they are hot. They have money that they want to invest in the market because they want to start investing in the market. So by the time I buy in November, September, then in January when they are now buying, they are buying from me. So they've increased the value of what I've already bought around November, September. So by the time they increase the value for me, I sell to them, right? So I sell to them at the higher value, right? So that's me short-term investing. So I've made money from people that have come in now. So they too, they have to wait for a certain period before they can sell or benefit from the dividend on a what day-to-day or month-to-month base. So the in conclusion, why percent is the biggest advantage in retail investors. So as a retail investor simply means you guys that are not buying stocks on an international. Basically, the unit of stock you are buying is low or small compared to institutions that are buying large quantities. So for you, you don't have the sophisticated knowledge to know when to time the market to know when to enter and to know when to get out, right? Because you don't have that sophisticated knowledge, you need to wait. Waiting simply means that you buy now with the expectation that price will appreciate and you earn what dividends. So again, there are intricacies and there are nuances to these things, but this is just me trying to summarize all of this. So thank you. I'll appreciate more questions. So from your questions, I can, tailor whatever confusion you have in your brain and answer your question specifically. But this is just a good summary. And if you want to build onto that, you can, always read more about the stock market. Thank you very much. And, yeah.
Thank you so much, Godwin. We sincerely appreciate all of the insights that you've shared with us. Your session was very educating, and not to waste too much of our time, I'll be calling on the next contributor, which is AK Joel Ebuka. He's very vast in investing as well, and I can't wait to hear many of the things he will be sharing with us. So, Joel, please, you have the floor.
Hi, good evening. Everyone can hear me, right? Okay, perfect. Yes, good evening, everyone. My name is Joel, and I'm a performance marketing manager for a global company, Eskimi, as you can see. Yeah, I like to think that it's really important that we had this conversation, especially because I've actually had conversation with a lot of people about wealth creation, and then most times people have knowledge about something but do not know how to approach it. So like recently, I think since this year, I made a commitment to try to bring a couple of my friends and then maybe strangers together to see how we can actually build well together, because I also am trying to invest intentionally in like old relationships, not building relationships because of what I'm trying to get out of it, basically. So in the light of that, I've come to realize that the people would you would hold account that you can hold accountable, the people that you have actually done like a lot of things together. So, and then doing a lot of things together would necessarily mean that you guys have to either religiously pray together, study together academically, probably for those that are in school. And then when it comes to like creating wealth, it has to be people that you save or invest together. So when this topic was brought upon, I was really excited about it. So I think the first talking point here will be why high income does not automatically translate into wealth. So I will pick all the talking points and then try to expatiate on most of them. So starting with the first one, I had a friend 2 years ago. He reached out to me that he currently doesn't know how to save. Okay, so this is the background story. He's always reaching out to me to borrow money, basically. So, and then because he's my friend, I have no issues trying to help him. But it got to a point I had to call him, and then I'm like, guy, I know you have a job, so how then do you get broke before the end of the month? I was dumbfounded when this guy told me he was earning around ₦1 million every month. And then when he reaches out to me, he's always trying to like borrow. Now, I'm not saying this to spite him, or yes, I know that challenges, but most times, which is the reason why this conversation is very important, there are certain parameters or there are certain measures we can put in place to help us curb unforeseen contingencies, like the second speaker spoke about. So when he borrows money, it's always like 20K, 30K. 10K. And then in my head, I'm like, it's not like you're borrowing like reasonable money. So what then do you use? And then he's a Christian, so he's not someone that I like to think that gambles. He doesn't. So until I asked him, and then he opened up, he said, yes, that is how much he makes, but he doesn't know how to save. So it dawned on me that saving is actually a habit that one learns over time. The first speaker spoke about people that used to do a job at the beginning. I've actually been a big fan of saving right from my primary school days. I used to save in every wine bottle my father buys because my father likes to drink wine. So after every wine, or probably whenever there's an event, I save all the wine bottles. But what I notice is after saving in the wine bottle, my money gets messed up. So I am not able to use them until I realize I have to start washing the bottles. So I even went as far as, I know this is dumb, I went as far as digging the ground to save money. So that's how myopic I was as a child. But it was all towards the aim of trying to save money to just buy stuff for myself every Christmas. That's pretty much while I was saving money. So I'll be able to join my fellow kids, buy knockouts, and then the likes of them. But yeah, that moment reshaped me because I had a goal and then I was trying to save towards it. Now, you don't necessarily need to earn any millions before you are able to, before you become better than somebody that earns in millions. You can confidently earn around 3 to 500K, and then you are able to make some very positive financial moves than someone that's earning 2 million. Yeah, so that brings me to like the second talking point, like the structure of the income, basically. So I tell people to always prioritize relevance over frivolities. So one of the major problems with the average Nigerian youth today is the fact that they prioritize irrelevance over importance. So you see people that either do business or work a 9 to 5, and then they're already thinking of how much they're going to blow in the club this night. I'm not in the position to tell anyone how to live their lives, but I would always advise young people, if you want to do something better or great with your life, you should be able to isolate or exempt yourself from a lot of things. Now, exempt yourself from a lot of things, some people like to see it as punishment, but I do not see it that way. I like to see it as discipline. Take, for instance, trying to carve out a career path for yourself. If you are not disciplined enough, you would not be able to progress in the tech industry. Do you get? So that's pretty much how savings work. So if you are not able to say, okay, I need to be consistent with saving 5 naira every day for the next 365 days, if you are not consistent in doing it, if you're not disciplined enough to say, if I'm going to, no matter what happens, I must save that 5 naira every day. So which is the reason why I think I used to like the idea of thrift. This normal ajo. I used to like the idea. I use the word used to because that was in the past. We have like other digital means to save money. So which is why I don't really see the need for anyone. Again, our elderly people can do that. Young people can also do that if you actually get like, but they're like more digital means. I know some people do not really trust these digital platforms to invest or save money. But yeah, whichever one works for you, the most important thing is that you have a savings, you have investments, and then you can also keep money for yourself to spend. You don't necessarily need to be an extravagant spender. You get, so spending, saving, investing, there's actually like a structure, there's actually a plan, there's actually percentages of your income that you need to map out individually for these three um points, basically. So the importance of multiple streams of income, I don't think anyone here necessarily needs me to like sing that aloud. Yeah, it's very important because you get to save more, you get to live much more comfortably, and then you get to invest more. So if you have like multiple streams of income, it makes life easier for you. But the most important thing is make sure you are doing the right thing. You get, so make sure you are doing the right thing. Right thing in the sense that you are living, the streams of income you have do not contradict each other. That you definitely need to perform optimally at every income channel that you have. basically. You get. So if you have like a job, a 9 to 5, you can actually also go into some side hustles. You can actually have like, I'm going to use myself as an example. I do like a corporate 9 to 5. I also have like a business on the side. I have like multiple businesses on the side basically. So I'm a laptop vendor. I sell laptops. I also have like a couple of POS, point of sale outlets. So now I'm actually bringing this out here because a lot of Nigerians overlook the power of small businesses. Um, Take for instance the POS. I used to, I started last year, and then the investment in that business was gradual. So I started with like 200K. So I don't do the business myself. I have people that do them for me. So this is actually how the structure works. I have people that do them for me, and then while they do that, I do not have like a shop that I say I set up. No, I met people that I know that I could trust that actually do the business. So I give them money and tell them this is how much I want as a return on my investments every week or every month. Whichever conversation you want to have with them is fine. So imagine one of the people I probably did the investments with. I gave him gradually from 200, added extra 100, added extra 200. So for every 200K I give him, he gives me 20,000 naira every week. So it got to a point I had over a million plus with him. So I was making 100,000 naira every week for doing nothing, but just having money that I had saved that I then invested in somebody's business. I don't know if you see the trajectory, saving and then reinvesting what you have saved. Now, there are savings that's like two type of savings. This is what I could quickly think of now. So you can save for unforeseen contingencies. You can save money that you want to invest. So he had talked about stocks. I'm actually very big on that. There are also some other investments channels like I'm sure a lot of us know CarryWise. A friend of mine even reached out to me this morning about Fair Money, and then I realized Fair Money have they also have like one of the highest interest rates. So I think Fair Money has like 20% on some of their certain instruments in the app. You get. So I also have CarryWise. CarryWise percentage varies, so you can actually decide to do. I think their mutual funds for low risk investments is I think around 17% per annum, and they have some. I think the Afri Invest, the I think is the equity stuff. That one is like 20% basically, or maybe a little less than. So, but I think overall, as far as I'm concerned, the whole of Nigeria, we have just one, which is CredPal, that does currently does over 27%. 27%, yes. I tested the platform last year, and then I'm not one to like just beat about the bush. I like to give like actionable insights. So in CredPal last year, I put in 200,000 naira. Yeah, because I was trying to understand the app. So 200,000 after 1 year, I made my interest accrued to 50 something thousand. So I withdrew the 50 something thousand last month, and then I reinvested the 50 something thousand into stock. I left the 200 still in the credit power, basically. So now that I understand how credit power works, it brings me back to research. A lot of Nigerians do not know how to research before going into stuff. So I always tell people, I do not know how to tell you this is what works, this is what works. I can tell you what works for me, but there's no cast in stone that what works for me at that point in time might continually work. You get. So that's pretty much how this investments work. So savings means you're probably just keeping your money in a place that you can actually go, say like our commercial banks and the digital banks. Yeah, you can just keep your money there, and then for most of the banks, many of us do not know this, but most of the bank accounts, if you withdraw less than 3 times in a month from that account, you get interest on it. So if you have what's it called? If you have, there are some bank accounts. I think Providus does it. I think GT does it. I'm not really sure about GT, but I'm very sure about Providus Bank. So Providus, if you withdraw not more than 3 times, say less than 3, maybe like twice or once from that account in the whole month, you get a return on investment, not basically a return on investments. You get like percentage on the money that you kept in the account. You get so, but some other banks, not every bank does that. At least to the best of my knowledge, not everyone. I know Providus does it. I still use EcoBank for like my savings, but I think the interest rate for EcoBank is small, which is why I had to pull out the money. But I think 2 years ago, I had maybe like around 5 million in EcoBank. Yes, because I was gathering the money for something. So I was getting around 40 something thousand of, yeah, like 40 something or 50 something thousand naira every month, because I couldn't access the account. I don't access the account. I don't withdraw from it. I only credit the account. So I was making around between 30 to 40K every month on the account. Now imagine making 30,000 naira off of 5 million, because you do not need the 5 million. 12 times 3 is 36. So that you're making 360,000 naira in a year for doing nothing. Now, the interest rate for banks are small. Imagine I had to put that money in piggyvest. My piggyvest, I have, while I was saving for my rent, my rent was around, I think, 1.5. So I saved the 1.5. I left the 1.5 in piggyvest. In that 1.5, I think I was getting around 16,000 naira every month. Yeah, I think between 15 to 16K every month. Now, the short period of time I was able to gather that 1.5 million, I know how much interest I got on that. Do you understand? So these are like the stuff that we can actually try. So talking about side income opportunities for tech professionals are what I just listed. Now I use myself as a case study. The multiple businesses that I do, you don't necessarily need to be the one having to get your hands dirty in the business. Basically, there are actually a lot of businesses that are neglected in Nigeria today that are very, very mind-blowing as regards return. So gradually transition from salary dependence to asset income is what I just also explained. Having to get percentage interest on every of your investment or savings. And also the businesses that you do, you get like profits from them. Using digital tools to track finances. I already talked about the platform that I use, CredPal, PiggyVest, Cowrywise, and there's something that is called MMF. I don't know if it's MMF, but yeah, it's called mobile money. Is it money market? Yes, I do that with Stanbic IBTC. But I think there's some. I think Carry. I don't know if Cowrywise does it, but yes, it's called money market. So basically, you keep a certain amount of money, and they have like very good interest rates. So yes, that's pretty much it on that end. So make sure you do your own research, especially when it comes to buying stock. My best advice is not necessarily always avoid the very cheap stock, those ones that are like 3 naira, 4 naira. Try to avoid them most times. But yeah, you can also just play around investing in them. And then, yes, like you mentioned, Seplat is like very, very good, but it's like way expensive now. I used to know MTN. I bought MTN when MTN was around 150 naira. I think that was 2022 or 2023 thereabouts was when I started buying MTN. But then I bought a very, very small quantity of it. So the mindset shift required to build wealth, basically, it has come from your mind. You have to like think and then believe that you can actually do this. Because if you do not believe, first of all, in the fact that you can achieve it, there's no way you can actually get it. Do you understand? So first of all, I like to say that this whole thing boils down to your belief system, basically. Discipline is the most important factor. And I'm taking this out of wealth creation. If you believe you can actually do certain things, if you believe you can actually, even the Bible stated it expressly that even if your faith is as small as mustard seed, you can move mountains, basically. So that's pretty much life's principle. So if before you go into something, you must first have that mindset that yes, I can actually do this and I can actually achieve it. Yeah, so that's pretty much it. I will be open to questions now. I think my time is up. So yes, thank you very much, guys, for
Yeah,
joining.
thank you so much. Thank you so much, Joel. We really appreciate all of the insights you've shared with us. So this is the time for question and answer. So if you have any question, kindly raise your hand, and I'll ask you to unmute yourself so that we have it well organized and structured. If you're asking a question, kindly direct it to any of the speakers. If your question is particular to any of the conversation that has been discussed. So please, if you have any question, kindly raise your hand so that I can ask you to unmute yourself. Did anyone hear me, please?
Yes, yes.
All right. So Mickey, please kindly ask a question. How do follow? Okay. Can you please ask your question, please?
Okay. Good evening, everybody. Can you hear me?
Yes, please go ahead.
All right. So I joined in a bit late, but I joined when I don't know if it was the first or the second speaker was talking about percentages for sharing your income, right? I don't know if you could rephrase on that part where you talked about sharing certain percentages that goes to investments, goes to emergency funds, so that I could actually pick the idea I was trying to share there, so that in the next time I'm getting my money or whatever I'm getting, I'll be able to plan properly. Thank you.
Oh, okay. Yeah. Good evening. How are you doing? Okay, so it's not actually cast in stones, right? So there are actually different ways to structure your finance. Yeah. One of the major principles that is widely accepted is the 50%, 30%, and 20% rule. Meaning that your complete salary or your complete earning is 100%. Yeah. Now, 50% of whatever it is you earn should go into your core essentials. That is your feeding, your transportation, your clothing. If you have any anything you need to do like that, like it's important, right? 50% of whatever it is you earn should go into it, and you must also be very disciplined about that. Now, the remaining 50% can be subdivided into 30% and 20%. 30% should go into your savings and investments, right? And the remaining 20% should go into emergency funds. Now, the first thing is before you invest, you must first have savings. That's the only way to invest. It is because it is the compound effect of what you have saved so far that will be enough for you to now say you want to go into an investment, right? But also, we have savings that go into investment, and we also have savings for raining days. What you are saving for investment is not your savings for raining days, right? Savings for raining days is that someone can call you that there's a medical emergency and you need to sort it out. You are not meant to liquidate an investment to sort that out, right? So that is where your emergency fund goes into. That is 20% of whatever it is you earn. So, but of course, there are different ways around it. It depends on how you earn and how disciplined you are, or how fast you want to actually achieve your financial goals, right? But basically, the 50, 30, 20% rule is what most people use, and it's something you can also try and start working around. Yeah, thank you.
Thank you very much.
Thank you, Mr. Falabi, for sharing more light to the question Maduforo asked. So Deborah, please kindly go ahead and ask a question. Deborah, if you are speaking, we can't hear you. You may need to speak up. I can't hear you.
Okay, can you hear me now?
Yeah, it's better.
Okay, sorry about that. So I said, I first appreciated the speakers. Thank you very much for your insights. So my question is, so recently I was informed about this investment opportunity in real estate, and you had to, I think the first speaker mentioned something around collective like people coming together to gather money, and then they build a particular house and then they own the rentage over a period of time. So the offer is that you pay like I think 700,000 now, and then you earn 12,000 naira monthly. No, 46,000 naira monthly. over as long as the house exists. So for me, I don't know, it wasn't looking like a really good investment, though it's really long term. So I really want to know if it is something what, because I was looking at it that in a year just for 6,000 naira, like it's really small in that kind of life. So I need maybe more insights on the pros and then the cons of it. Thank you. Okay, sorry, yearly, 46,000 naira yearly per year. So when they pay
So
the salary, when they pay the house rent, we as the contributors to the house, we just get 46,000 naira.
that's quite small. That's less than how many percent is that?
That's
So
6.5%.
exactly,
That's
which is
sorry to
like
use the word, but that's rubbish.
exactly. And the average commercial bank would easily give you 6.5%. If you put 700K in piggyvest, you get way more than that every month. You get way more than that in a year. Now, if you are getting 46K monthly for 700, I told you I put 200 in credit card and I got 51,000 after 1 year. So you see, imagine if I had put 700K, so I would be getting maybe like 175,000. Wow, I wish I had done that. Yes, but yeah, sorry. I also wanted to respond to the question in the chat from Olamide. So what I meant stop buying cheap stocks is most times because a lot of people want to accumulate more units, they tend to just jump into buying the cheap ones. So I think the cheapest stock I have bought is Jais Bank. Now, the reason I bought Jais Bank was because I saw the prospect. I bought Jais Bank at 5 naira. Currently, Jais Bank is sitting comfortably at around 11 naira. So imagine if I had so much money like the first speaker, the second speaker when he was using hundreds of million. Imagine I had bought Jazz Bank worth say 100 million basically. So I'll be getting like 200 million already by now. So that's how investments work. But now Jazz Bank increased up until 13 naira. I think few the last 2 weeks, and then now it has dropped to like 10 naira, but is still around 10 naira, which is still like a profit for me. But I've not made so much profit again from it because as I saw the growth trajectory, I had to buy more. You get same thing with MTN. I knew MTN when it was 150 last year December, MTN was around 4 something. But currently, since January, February, MTN has gone to 790 naira. You get so imagine having to have bought 1 million units or probably 1 million naira worth basically of MTN while it was at 150. Now MTN is at 790. Now imagine how much more you would have made. So that's pretty much how this investment works. There are always risk involved. That's one thing I always want to tell people. There is always risk involved. So you have to there's what we call calculated risk, I think in economics. So calculated risk are when I hear a lot of people say that you have to take risk in life. No, you don't take baseless risk. There are risks that are calculated, which is the reason why these wealthy men are always wealthy because the risks that they take are calculated risks. They know that okay, what's the worst that can happen? I can actually lose a certain amount, and always also make sure when you are investing, you do long-term investments. I don't know, which is the reason why there is that 50-30-20 rule. So always make sure that your investment are long-term because you benefit more when they are long-term than when you are trying to like do short-term. I can understand short-term too and when I mean long-term can be like 1 year, maybe 6 months, 1 year basically is like a fair deal. But the longer your investment on these platforms, the higher, like CredPal, the longer your investment duration basically, the higher percentage you get. So if you are investing 1 year in CredPal, you get 27. They even reached out to me one time that they were doing 29%. And then that's the highest currently in the whole of Nigeria. So yes.
Just in 1 minute, I just want to add to answer explicitly Deborah's question. So the reason why I said the 6.5% is rubbish is because you are taking on a lot of risk because maintaining a building, rent, and all of that, real estate has its own or carries its own risk, right? The benefit from taking that risk is 6.5, and there are other risk-free investments that would give you nothing less than 115 to 125,000 naira extra on your 700,000 on a yearly base. So that is why I said it is rubbish, because it is giving a return below what a typical risk-free bond would give you.
So Bamidele Fayemi, can you quickly ask your question because we're rounding up the session in the next 4 minutes. So please quickly ask a question. So for any other participants, if you have a question, kindly join the community and share your question there. It will be attended to by any of the guest contributors. Thank you.
All right. Good day, everyone. I want to use this medium to commend the speakers. That's Mr. Biodun, Mr. Godwin, and Mr. Joel. I would say this topic is very, very fantastic, and it's what everybody needs. But it's quite somehow that most of the things that are discussed about is very, very important. And the question I would like to ask is, there are a lot of things I would like to say because I actually know much about stocks and all of that and how it works. And they really said a lot of points. But what I would like to request for, if the materials that were, used to present can be shared, if there is any way I can get that, it's just a request. Thank you very much.
All right. Thank you, Bamidele. So I've shared the link to the community. For any of the resources that was mentioned, it will be shared in the community. So if you are not a member, kindly join. And if you have any question or contribution to this discussion, you can also share it in the House of Tech Central. So thank you everyone for joining. For every of our contributors, I sincerely appreciate you all. Afolabi, Abiodun, Godwin. I'm sorry, I have difficulty pronouncing your last name. I'm so sorry about that. Therefore, AK Buka, I sincerely thank you all for taking your time to join the session. We were supposed to have the section on Twitter Spaces, but because of the technical glitches that we experienced, I had to migrate everyone to Google Meet. So we sincerely apologize for the delay, and we hope for subsequent webinars. We have another one next week, however. The focus is career in data analysis. So we have experts that will be coming around to educate as many people that will be attending that session how they can navigate, data analysis and data science, everything you need to know about data analysis and data science. So once again, thank you all, and I wish you all a restful night sleep. Thank you.